see that the structure is bullish. Double inside day, markets continuously closing up higher and higher on top of it. And this is Apple. And watch this. You see how, I'm going to draw it out here. This is an inverse head and shoulders. And it doesn't mean that this is going to break out. So here's the left shoulder, here's the head, here's the right shoulder, and here is the neckline. Okay, it's already broke the neckline. Okay, so how does this play? Like, what are the possibilities? It's not about, oh, well, this is going to go ripping face. Yeah, so for example, it's a bullish setup for sure, without a doubt. But this is just one data point that I like to look at, right? What is the RSI telling me? Because a lot of times, you can be looking at, where the dealers are positioned, where the gamma's positioned, where the structure of the market is, and you may be bullish, but this is just an extra layer of confluence that's telling you, like, this is a load and explode. I call it load and explode. It loads, drops down, and then it pops up, and then it reloads, and it has a neckline. Once the neckline breaks, it usually pops up, retests, and then rips up a lot of the time. So it's like communicating a bullish setup on Apple. However, with that said, we could see something like this: a pop up, drop, then up, and then down, right? That would create a bearish divergence, and we could go see new lows. But that could even still, in the short term, bring Apple up, and fill this zone here between, I'm not saying it will, but it could, well, let me actually get out of there. That's way too high. But I definitely expect it to get up into this zone here. If this sees continuation, that'd be like between, 200 to even up to, 210, 213. Does it fill the full gap? I don't know. We'll see. Let's see how the whole market pushes and see what kind of news comes. So now I'm going to go to another setup. So you remember this, right? Okay, watch this. Oops, no, not NVIDIA, Amazon. Similar setup, very similar. You have the left shoulder, here's the cup, here's the right shoulder, and it's starting to break up. This is a bullish setup, very similar structure on the candles, very similar to Apple. Not leading as much as Apple, but it's catching up, and it still has room to move up. And then check this one out. And we got another one. There's a bunch of these. Let's take a look at the Qs. Same setup. Look at that. Left shoulder, head, right shoulder, showing it wants to move up, come in and go up, or it's going to go up, come in, bearish divergence, and fail, right? Those are the two scenarios that I see happening here. Regardless, short term, it's going to be bullish. Depends on how tomorrow opens up. Tomorrow's opening print is going to be really important. Now let's take a look at this. What's SPY look like? Same fucking thing. Left shoulder, head, right shoulder, neckline. Okay, we could see SPY, we could see NQ shoot up, right? But we could see SPY here hit the neckline and reject, right? So these are things that I really want to be aware of come off right out of the gates on Mondays. Where are we opening? We're not just where the data is telling me, right? What is the RSI communicating? What divergences are happening on the smaller time frames? And here, look at the VIX. It's the opposite. Obviously, you can see this is a shoulder, a big head, and a right shoulder, and here's the neckline. Okay, so on this setup, we could see, on the 4-hour, a bullish divergence setting up, right? If price goes down, okay, right? But this RSI maybe floats and doesn't make a new low underneath this one. So that'd be bullish divergence. Price makes a hair, maybe goes a little lower, pops up, and this RSI doesn't quite make a low. I'll be watching this setup for a possible reversal. Okay, and then we're going to float over to MSTR on the daily. Look at how dirty that is. This is a really, really clean, symmetrical setup. Like you can see how clean it is. Very, very sharp and how these things close. And yeah, it seems simple, but not many people pay attention to this stuff, first of all. And and I've traded this stuff a lot. And it communicates a lot of information to you. And you can put these things together, and we will put these things together with what the dealers are doing, where the gamma's positioned, where the positioning is overall in the market for Monday, for Tuesday, and so on. And this is just one little aspect that we're going to be watching. And there are a lot of good setups. Look at TSM. They have earnings coming up. So what are the scenarios, right? One thing I want to say is they all have this setup. It's pretty crazy. I haven't seen this in a long time. Nvidia's front running it, right? This is expanded a little bit more, right? Earlier, Google expanded a little more. These are ones that have a little more strength. Let's take a look at ASML actually and see what that is, because they have earnings too this week. So we have two big chip companies, ASML and TSM, they're reporting. So ASML is leading too, right? So, ASML has room up to here. Okay, so like this is loaded up, right? If this thing now, with all this being said, like there's a shitload of stocks that fucking are dialed in like this. But what the most important thing that I want to tell you guys is, if the market's really bullish, right? And we're running up, like, there's two aspects to this. There's the psychological aspect. Hold on a second. Hold on a second. Is he in here? Hey, yeah, Jew boy, I just read your message. I'll get back to you. Hold on a second. Uh, so there's a lot of, like, the psychological aspect of the market is just as important as the technical aspect, and like in the derivative market and how everything's laid out. And you know, I've said this many times, like these algorithms, they're not meant to pay retail. If you don't know that, that's just the reality of it. Like they're meant to fucking take your money. Um, so, we use a lot of information and data points to be able to gather information and set ourselves up to be able to make as much money as possible with the least amount of risk. Now, one thing I want to talk about is this RSI. So, you see this yellow line right here? This is called the signal line. And then the blue line is the RSI, right? Now, one thing that's important to understand is every time this RSI, the blue, gets really expanded up away, the signal line down here it doesn't catch up as fast. It moves very slow. You can see that very clear in previous price action, based on the RSI. Let's just take a quick peek on history. Okay. Every time it expands away, it reverts to the signal line. Same thing. It's just a basic mean reversion. It's called relative strength index, and it's also a measure of sentiment too. Like everybody gets bullish and gets a little excited, and then when you get a little overbought, you want to be cautious and start to look to sell, right? Now, the interesting thing is I've traded this one. I used this data point for a long time, and what I've found is that every time that this RSI expands away from the signal line, it always reverts back, even in a bullish context. So it could still do this and stair step out. However, on Monday, all these RSIs are going to be expanded out. They're all of them are. They're all going to be like up in here, and the signal line's going to be like right there. And so, do you want to be bullish if the market is fucking, blue spruce green at the open? Everything's fucking lit up like a Christmas tree, or are you thinking reversal possible for a mean reversion on a lot of these stocks, not just ASML, but a lot of them? Catch people, like everybody's going to see the market fucking green. They're going to be slapping fucking calls. Look at Goldman. They have earnings here. What the fuck? There we go. Let me go to financial sector. Same setup. Like, I'm not making this shit up. You guys can clearly see. Like, this thing, I expect this stock to rip. If it doesn't rip off, I really do expect it to rip. And so I'm going to be watching Goldman off the open. And then we're going to keep an eye. Obviously, we trade, ES and SPX, right? But I really want to see this stock rip hard. If it opens flat or a little down, I would like to long it based on the previous closes, like Fridays, based on some of these levels down here. I'll be watching to see where it opens, because these contracts, with it being a short week, are going to be cheap. And if it opens up inside the implied move, now we're going to get into what an IV flush is. An IV flush is when, let's say, for example, the measured move, I don't know what it is. Let me check here. The implied move for Goldman is, so it's up 12 right now in after hours. It's up 2.5%. So the measured move, or the implied move for tomorrow, is $33. Holy shit. So if it's inside the $33 mark, what does that make us? So $33 would be, that's what, 520 bucks roughly. No, that'd be 530. My bad. Yeah, yeah, 525, 127 bucks. 527 puts us where? Kind of in this supply zone right here. Now, isn't that interesting how the implied move takes us right to the previous supply? If it takes us there, then we're going to watch and see where NQ is set up. If NQ is set up and overexpanded as well, and ES is maybe lagging but can't quite, or SPX can't quite clear that 5,500 on SPX, but NQ is expanded, we're going to watch SPX to see how that responds at that key level, or maybe it's 5,420, whatever it is. We'll be watching this type of stuff, so then we can get a read on the market direction and whether we're going to reject really hard or whether we're going to just oscillate and chop. So tomorrow, I'm excited for tomorrow. This is going to be fun. Now, let's say it doesn't. Let's say it opens up within the implied move here. Okay. Now, all those options are going to be worthless for tomorrow morning. And then we'll look to take this to the upside. I'm not interested in it going down. This thing ain't going to fucking go down. I bet money on it. If it opens up inside the implied move, we'll look for identifiable supports, and we'll grab calls off it and IV flush it for a big fucking gain. So when we do an IV flush, one thing you want to watch is the hourly volume. So a lot of times on in earnings, you see this hourly, you can see down here, the hourly volume. What they do is they'll drop the stock. They could drop it, way down here or way down here in pre-market, and then open it up right here on no volume. So it's really important when you're watching an earnings, and when the stock drops hard, how much volume are they actually using? If they're using a lot of volume, okay, then the move's justified. But if they're not using a lot of volume, you really want to be paying attention for a quick upside move. We capitalize on massive plays for well over 3, 4, 500% using this strategy for a simple IV flush. Very low risk, cheap contracts, and you can get them to go. So, all right, next up, BTC. Okay, interesting. BTC is sitting right at my spot, right on it. It's flagging, right? Let's take a look at what the RSI is communicating on the 4-hour. Okay, so the 4-hour is showing us bearish divergence is setting up. So what we could see on this is a possibility. For me as a trader, I like to understand like scenarios, right? Like just like, when you play chess, you want to be thinking like 3, 4, 5, 6, 7 steps ahead of your opponent and all the other scenarios that they could possibly play. And then you're prepared for anything with a clear mind with no real bias, right? The only real bias is that you're open to all these different possibilities. And so when that opportunity does show itself, you know exactly what to do and how to handle it, right? Like that's the name of the game. We are as a trader, we are professional bettors, right? But we also are poker players, right? Reading bullshit, reading the news, reading all this shit, right? Reading everything, geopolitics, the economic backdrop, and then we're calculating probabilities, right? So we're using chess too. The probabilities of this scenario and this scenario based on, the data that I'm given, right? Where the dealers are positioned, where the gamma's positioned, the time of day, what the opening print was, what's the structure looking like? What's the sentiment right now? What was futures saying? Was it really bullish? Have we hit pre-market high? Did they break opening range and fail? Are they going to go up and grab the liquidity at the top of pre-market high? What are they going to do? Like thinking about this stuff instead of just slapping shit at the open is the name of the game, right? So sometimes you just have to slap it at the open. Like that's just the reality. I'm not saying right out of the gates. There's been like probably 1 or 2 times where we've hit something literally right at the fucking bell. But that was because there was such a high confidence of a open and flush or open and rip face. And we saw it setting up in pre-market, right? So that's a rarity. Typically, we don't want to be taking any kind of trades until, at minimum after the first 15 minutes of the open, right? We want that data to show us their hand. Get a nice glass of vino right now. All right, so let's zoom out here on the weekly and take a look at BTC. All right, so actually, let's take a look at the daily here. Oh, fuck. I had the drawing tool. You'll see me do that shit a lot on here, is I accidentally have the drawing tool.
No, I'm coming back down, but there's all up here on this building.
So this is a pretty clean channel. Okay, and for those that are like just learning how to draw a channel or levels, right? Look at the wicks. I focus on wicks. Not a lot of people do. Some people might be like, "Oh, this already broke out," right? Wick. You know what I mean? I that's just not my style. I focus on the wicks right there. For me, I've had the most success on the wicks. The wicks to me communicate exactly where the algorithms are going to kick in, right at that specific price. Right? There's a reason why price reverts back up, snaps back at this spot and not down here. That's clearly a big spot for them. Okay, so we could take this channel or this line here, and we could scoot it up a little because this one's being respected a little bit better, right? in the short term, right? So, if you're learning how to draw, focus on the wicks, keep it clean, right? All right. Now, we were talking on Friday a lot about, um, let's move over to TNX. Where are we at here? This is the 10-year yield. Okay. 10-year treasury note. So, this thing's made a really aggressive move up. I made the comment that, one thing that I could see is because they're ripping the market so high, or sorry, ripping the 10-year with the market, that they might be ripping the 10-year, right, to sink it, to drop it more, to be able to relieve pressure on equities. So Monday and Tuesday and this week, most importantly, we're going to be watching the 10-year. Okay, we're going to be watching how it responds, right? And really, you want to be putting a line. I think it's right at 4.4 is a good spot, and then really right. Where's my spot? Right, 4.2, 420. Smoke them if you got them. So, under 4.4 is going to create upside movement, right? What's interesting is the 10-year really hasn't been acting properly with the markets. Like, you can see here, we had a fast, nasty downturn in the 10-year, but the markets drilled too. And then now the markets are moving up with the 10-year. It's really odd. Typically, it's the opposite. Typically, the 10-year, when it starts to rise, and especially gets over that 4.4 level, you start to see pressure being put on equities. And then conversely, as it drops, it releases pressure off of equities, mainly high tech or big tech. Let's take a look at JNK. JNK is the junk bond market, right? And it's high yield junk bonds. So, I have a bullish pivot up here at 97 almost. So this is showing us risk off, right? But yet the markets are ripping, right? And then we have HYG, which is in the same scenario. This is the high yield bond market. And this is also showing risk off. So there's a lot, for us as traders, to me, this is the time to be very, not to really be like any directional bias is, I think it'd be better for us all. And this is my approach is I don't care if we go up, down, or sideways. Like, I have a slight bias, right? My slight bias is going to be, in the short term, let's see where we move up. Let's see where we find rejections on ES as well as SPX and NQ. Like, this is really important to me this week because we might be taking shorts depending on where we open and push up into. We might be taking shorts this week right off the rip. So really, really, really a big deal to me, and how Monday sets up. Typically, the pattern, this is not every time, but typically the pattern on OPEX is our OPEX weeks are, we run into VIX expiration, which is Wednesday, and then we drill on that day or after that day. Interesting setup though, because we have a short week. So, and then we also have, TSM, and then I guess there's a Japan thing going on Thursday. Is it Thursday at close? What was it? Somebody posted it. I forget. Does anybody know? Is it Thursday at close or Thursday pre-market? Let me see here. Anyways, doesn't really matter. I guess the point is, as we as we go about it this week. If we shoot up to 54.20, 54.25, I will be very focused on looking for shorts and playing the reversion back down into this lower zone down in here. Right? That's like it would be like about a 200-point short. So that's important to me, like top of the list actually. And then just because, like I just said, I just basically just laid it all out. You have the 10-year, pretty rich and high. That should be putting pressure on it. You have every single stock in the market ready to pop, and if it pops off of the open and gaps up, all those RSIs, every single one of them is going to be overexpanded, and everyone's going to probably be chasing the long side, unless we get some crazy fucking news and we drill tonight, which I just don't see that happening. But anything can happen in this market right now. This is T-Rump's market. So, the big thing is you have to ask yourself, what's the upside here? You know what I mean? Right? And when people see the market's really green and open, it's FOMO. That's just what it is. And what happens to the options is you have the call IV increases, right? Call IV increases. And as they push the market up, right, into the open, which we see a lot, we see green open, and all of a sudden, boom, 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 it shoots up. That call IV is reflexive. So it shoots up, it expands, and then what happens is the put IV drops really hard, and the VIX drops, right? And it drops really fast, right? So what happens, like 90% of the time, is as you shoot up high into a resistance, the big smart boys and the smart money, or the institutional traders, they're loading puts as fucking retail's buying calls like crazy. And then you see this, and then it fails, and it fucking drops, right? So like this is the psychology that fits with the data, that also fits with the technicals. And this is how I like to trade. And it's just to try to put it simply, I guess. All right. Now let me think here. Anybody have any questions on that? What we just covered? And market's already given up gains. Look at 5 minute. Okay. All right, no questions. Okay, I'm gonna talk about a couple setups I really like. I like TLT. Why do I like TLT? This candle right here. Tomorrow and Monday, Tuesday are gonna be important days for me for this TLT. I want these next couple days. I want to see TLT. I want to see this thing start to push above this line, right? We start to get above that line, and then the next spot would be, stair step up to here and then close over here. Once we close over this one, it's going to magnet right to this zone right here. Right now, that's a nice move. And the thing is this is the kind of stock or trade where the IV, the implied volatility, is so fucking low on the contracts. Meaning, if you buy the $90 calls for May 16th, let me pull it up. TLT. It's down a slight bit. They're $1.16, 1.16. That is so cheap. And the IV is 22%. To put that into context, when the market's drilling and where you got all this fear and shit in the market, the IV shoots up usually well over 50%. Just last week, it was at 140%. right? So any move up in the opposing direction of your play will kill your options. So when they have the lower IV, you know, you can get away with it a little more. It's not gonna smash your trade. You know, that doesn't mean you just load the fucking boat in them. You still scale in, size it up, you know, what's your risk? What are you willing to risk on that particular trade? You know, so because you can have two options. You can put a stop on it, or, you know, for me, what I'm gonna do is I'm gonna size it, you know, 1/3 to a half position, and then I already have a starter on the 91s. I believe it's the 91s. But once this thing closes up here above this wick, right? Or this zone here at 87. Let me see what the price is on this. 87.30. Once it gets above that level, like that's then I'll start to add more size to it. As long as we close over it for like the next 2 days, I'll start to add size to it to be able to get, you know, get a little more out of the trade, because this is it should be a layup trade, you know, unless there's something going on. I mean, look at the zone. Like it's double bottom, beautiful reversal signal right here. You know, this is the zone that you want to be targeting up here where that we had the massive reversal. Um, so that's one of my, like, very easy trades, and if it goes wrong, it's not like you're gonna get smashed, you know, you just stop out if you want to, or what you could do is wait for confirmation above the wick and then enter. It's perfectly fine. Alright, so I didn't really do this one yet, but let's take a look here. Microsoft and oops, wrong one. Microsoft's most likely gonna open up in resistance, unless it gaps over it. If it gaps over it, it's got, yeah, actually, it could move up here. That's a possibility. Yeah, I'll just leave it there. That's probably the upside magnet right there. Yeah, most likely. If it clears that, then it's gonna really rip. Um, all right, Tesla, and oh, everything's the same. Literally every fucking stock's the same. Let's go to look at small caps. This is a dirty little setup, actually. So if BTC does pop, if it breaks that trend line that we just talked about, let's go quickly snap back to BTC. If BTC does break here, it's most likely going to get rejected here at this wick. Okay. If it gets rejected there, it will retest. Where's that? So you could see something like this pop up, come down, shoot up, and then go. You want to see this for bullish continuation. So just basic price action, like if you're looking at just a pure pattern, if this is your line right here, let's just do this. Let's make this really simple. Let's say, here, let me go like this. Let's say this is your line right there. Let's go big line. Okay, a bullish, very like a breakout price action against this line is, it looks like this. Price shoots up, comes down, shoots up, and builds momentum like that. You see that? If it's bearish price action, you'll see this. This is just pure basic, like, um, like pattern awareness based on price action. So this would be bearish price action. Up, down, up, and then down. You see the lower highs, it's weakening, under resistance, rejecting, and going down. So just keep that in mind if you're a newer trader. All right, now let me take a look. Somebody mentioned China. So I noticed that the dollar is drilling. So the dollar dropping literally out of the fucking sky is a big deal for China. I mean, where is this thing gonna go? Like, holy shit. Where's it gonna go? Where's it gonna bounce? Let's find out. Oh my goodness. Oh dear. I'm gonna have to do some work on this and find out where this dollar is gonna bounce. I'll probably be looking at 97. We're at 99. I can get more precise in the numbers, but these are rough shots on it. Yeah. Well, that was pretty close, huh? It's not bad. So DXY, if this stays down here below 101, you're gonna see China rip like hard. I don't know what BABA is up, but we have BABA swings. So China is actually going to be something we're going to probably watch to play to the upside. PDD. What is going on here? Let's take a look at this weekly. Oh, it's broke. Interesting. All right. So PDD. That'd be better there. All right. Yeah, because that's a tap on the weekly. So PDD might not be a bad play to take up, depending on where it goes. Take it up to this trend line. Depending on where it's opening, it's probably going to gap above the trend line and then rip. So we'll keep an eye on China. Yeah, BABA does look juicy. We're in BABA swings. Oh, you're in it. Nice, good. Yeah, I don't know. Let's check and see what it's at in the after hours. BABA. Yeah, it's up a couple bucks. Our contracts will be up nicely. All right. All right. So, all right. Yeah. So Mara. Now, based on Bitcoin's pattern, we're going to watch that. I would really love if Bitcoin does decide to, pull one of these, break out and retest. Mara's going to do the same thing. It'll probably shoot up, hit 13, come back down, shake people out, and then we want to see that action, right? That's what we want to see, right? So this is a stock that can move really fast, and the IV, based on where it's at right now, can really work in our favor. So this is not a bad play for equities as well. I don't mind it, but just be mindful. It's a higher beta stock. It's a small cap, obviously. So a little riskier, but I do like it. Volume supportive, looks good. Right at resistance, really clean chart. It's just setting up for a nice move to the upside. So that'll be one on our watch as well. Now UNH. Here's another stock I like for a short, actually. So I think it depends on where they open this up. They have earnings coming. Oh shit, it's Friday pre-market. Yes, or Thursday pre-market. So this is one of the most fun stocks to play on 0DTE. Like literally, this is one of my favorite fucking stocks to play on zeros. Like I've made a couple plays on this off of an earnings IV flush, and I've taken like contracts from a buck or from like 1.2, 1.3 to like $2,000 a piece. like crazy. Like, one time we took them, I think it was like 2 years ago, and it was like $300 turned into like almost like 15 grand or something crazy. This stock can fucking boost or it can fucking dump hard on earnings. Based on the setup, if we open up near or above all-time highs, I'm looking to short the fucking piss out of it. Right? So that's what I'm focused on here. We'll see. We'll see what the implied move is. We'll see what the guys on the floor are doing. We'll see where the gamma's sitting. We'll see where the dealers are positioned. All that good stuff, and we'll get our data and then attack it accordingly. GME, yo soy, we got GMEs. The sucker's gonna fucking drill. Anybody have any idea where this thing is going to go to? Let's see if anybody's been paying attention. Anybody have an idea where it's gonna go?
There's
I haven't drawn.
support at
Go ahead.
20. So there's support at like 21.
Well, GME is at 26 right now. We're in the GME $30 calls for May. Where is GME going to go? I'll give you a clue. If we break, what level, where will it go? And this has nothing to do with sentiment or anything. It's just purely where they're going to push it based on liquidity. If we break this wick at whatever, let's just call it 27. Actually, let me get the precise high, 26.88. If we break 26.88 or gap, retest, and hold, it's going to shoot up to 29.94. If that's a wick. What's that wick? Yeah, 29.92. Let me clean that up. That's where it's going to go. And our $30 calls are going to go fucking ripping face. Right? So, how do I know that? Do anybody know how I know this? It's because right now, it could, but first things first, PB. First things first, it has to get to this first. Is because if you look at structure, where did the biggest bearish move first start? On this trend, on the first trend down, right here, right? So if we break this spot right here and hold it, they're going to go grab liquidity up here, right? And then they're going to probably trap people chasing, come down to either here, right? Or maybe here, right? And then we shoot up and hopefully break and then go grab liquidity at the next level, right at 31.72, if that's that wick. What's that at? 31.66. Let me tighten this up. Shit's weak, dude. Gotta tighten that up. Can't be off by fucking a couple cents. Fuck. I ain't fucking around in here. All right, the high then is 34.40 is the next spot. Okay, those are accurate. But it's not gonna hit that spot. Okay. If it pops it and it does stair step out and end up holding 31.67, or maybe it gets news or something, it starts gapping like crazy, we're gonna go right here. Right there to that 33 level right there. In that zone. Oh my god, it's so narrow. It's hard to. There it is. There, that's good enough. Okay, so then that would be the zone. So that's how I'm looking at GME. So as you're in your trades, how do you trade this? You're not going to just hold. You could, but it's not guaranteed we go up there. It's just not. At the end of the day, the goal is to make money. It really is. If you want to size it for zero, your whole trade and let it go, that's fine. Do whatever you want. It doesn't matter to me. But if you want to, say, for example, you got 10 contracts, right? You got 10 contracts, and right now we're already up 22%, I think, on them. 20%. Let me check. Yeah, I'm up 21% on my contracts. Maybe let me see. Yeah, 22%. So if I already took a trim, right? So now I'm almost risk free, right? Because we took a little trim at 25% on Friday, right? And we got a lot of time left. So what I'm going to do is I'm going to work around my position. What I mean by that is if I have contracts at 1.55 on the $30 calls for May, and this thing rips, right? And I have, say, 30, 40% position left. This thing pops up to 28 right here tomorrow. And then 27 to 28. And then it pops up and gaps up. Well, we know history says that every time that GME gaps, it's going to liquidity grab down below and trap chasers. So if it does pop, gap, I will take a small trim, probably take one contract off. And then what I'll do is let's say maybe I have 4 left, to take one off, I got 3 left. And now I've still taken even more profit. And let's say it comes down and it retests this zone that we just identified here at 26 to 20, those contracts will come all the way down to probably, only up 10% to 15% because of the drawdown on IV and price, right? And the effect it has. So then what I'll do, knowing this, is as long as this zone here holds at 26.88 at that high, then I'll start to scale in more. And I'll start to use my profits to add more. So maybe I made $300, I'll add a couple more contracts. So now I got 5 instead of 3. And then all of a sudden, maybe I'm feeling good about it and I add another 10. So I got 13. Right? But a third of the positions paid for, or maybe not a third, but maybe a fourth of the positions paid for. Then it rips to the next zone. Now I take another half off, right? Wait for it and see if it breaks. If it doesn't break, or maybe I take 3/4 off. If it doesn't break, I know it's going to come back in. And the next spot I want it to hold when it comes back in is this zone right here at 27 to 28. If it holds that zone, I can do the same thing, nibble back in with my profits and wait for the next break to the next zone. And that's called working around your position. You're paying for your whole position. And eventually, by the third leg, you should have your whole fucking position paid for and let those fuckers run and have maybe 8 or 9 contracts left because you sold, or so you trimmed 70%, added back with some profits and a little more, trimmed again, added back a little more, and then you hold for the big ripper. And that's how you work around a position. It's very strategic, but this is what a lot of the pros do. Does that make sense? Okay. So I assume, yeah. Okay, good. All right. Um, and this is how you can still have your thumb in the trade, like a lot of times, if we say, for example, we gap to 29, I'll sell all my contracts and I'll just leave one, right? And if that one comes all the way back down to close to even, I'll watch where it cycles and where it holds. And then I'll look to load back in for the next leg as long as structure and everything looks good. Okay, so that's that. Let's take a look at this ASML. Oh, we already did. We already looked at this. This looks good. The earnings, buying volume is really nice. Okay, let's take a look at TSM. Fuck ASML. Because we have a position, a long position built in. Will you look at that? Bitcoin is rejecting, guys. It's still staying under this trend. All right, where's TSM? Okay, here's TSM. I have not charted this yet. Where's this at? This low. Where's the low on the wick? 53. 27. Okay, and then where's the low on this wick? 46.93. Okay, and then we're going to draw our boxes. Actually, let me get rid of that. All right, we're going to go like this. There, it's really thin. Yeah. All right, so pretty close. And then here. This is how I'm looking at TSM. All right. And then you could target actually this on the really high upside. Yeah, so this is how TSM's looks to me. And then downside wick right there. Make sure that's at, what's that, 37 on the button. Whoops, we don't need that shit. All right, 37. All right, so this is how I like TSM. Now, the reason why we are long TSM shares in a starter position or 1/3 position is because there's a small basket of stocks. There's a small basket of stocks that I'm highly interested in for a long 5-year hold. And I know that these will all double easily. In aggregate, right? Aggregate double. Maybe one doesn't quite double. Maybe the others, do a little more than a double. TSM is one of them. It's actually in the top 3 of my basket. So, looking at this, if it comes down, to here on earnings, well, we're gonna nibble and build more of that position in. That's why when we build these long-term positions in shares for the medium to larger accounts, like over 50K to higher accounts, or even under 50K, you can still nibble, but just be really light, because this process. It's very important to understand this. This process is not going to happen overnight. It's not going to happen in the next 2 months. We could actually have a bottom hit in October, right? We don't have to bottom next week or in 2 weeks. Okay. We could, but the likelihood, in my opinion, I don't know if that's going to actually happen. We're going to see. I think we could see, upside pressure, then more downside pressure, and then even more upside pressure, and then even lower, even bigger low coming. So I haven't even touched on like the geopolitics and the economic backdrop, but going forward with these earnings that we have coming up, we really want to be like, if you're paying attention to it, what I'm going to be looking at is how are they managing their costs? If they're managing their costs in a way of cutting jobs, right, to offset expectations or guidance for the investors, that's going to be a red flag for us, or a cue that we want to be looking to short and be looking for a new low, a newer low, a lower low after after the next quarter, which would be like September, October, which would match with seasonality as well. And also, there's a holiday that usually marks the bottom, typically before bull runs, which is right. It's a Jewish holiday. I forget the name of it. I'm not going to say it because I don't want to butcher it and offend anybody. But it's right around that time. So, anyways, long story short, my point is we want to be very methodical and very, very patient when we start to scale in to this basket of stocks. And there's 3, 4, wait, 1, 2, 3, 4, 5. There's about 6 of them. Really 6 that I want to be heavily concentrated in, that I believe very strongly that they're going to get government funding, that they're going to be the leaders coming out of the market as we get into a bull run into the midterms. This administration is very aggressive with the tariffs and all this stuff, right? They're trying to turn on our economy from a demand side economy to a supply side economy. That is a good thing for us. There is going to be a lot of pain in the short term. That's okay. Everybody's going to be bitching about their 401ks. That's okay. For us as a trader, we just trade the market. We make as much money as possible, and then we build our war chest of cash, and then we deploy it strategically so that when we hit bottom or when we start to come out of this, we're positioned really, really well, right? Really well for a nice bull run. So having a supply side economy is going to allow rates to be lower. It's going to have more balance of trade, which is really good for everybody in the world, even though it's painful and people are short-sighted right now. So also from a valuation perspective, we got a lot lower to go in the overall market. That doesn't mean that TSM is going to go to $50, right? It doesn't at all. Like TSM, Nvidia, a lot of these could find short or long-term floors, around this area, like in this zone as the market fucking drills. I know for my contacts, and so for those that are new, everybody has their own contacts. That's great, but I have high regard for mine for a specific reason. Number one, the gentleman who owns the multi-billion-dollar, well over 12-15 billion-dollar fund, he is probably the most well-connected person that I'm not going to say. He's just really well connected. Okay, he has a direct line and talks to Jamie Dimon every week. He used to work on the White House staff. He has 3 people on his fund that are high up in the fund that used to work on the White House staff. He is no Morgan Stanley kind of shop. That's just a local, you know what I mean, director of Morgan Stanley. This is a high net worth fund that doesn't fuck around, and they don't miss. They sold the top by 7 points, you guys. And my boy, who does the buying and selling for them, and he's top analyst, says, bro, we just sold 15% of the fund. They sold at 61.40. The top of the market was 61.47. We got short, and there's a couple members that turned 50K into over $1 million on that short that we called out at the top. Not anybody else. Nobody else in the whole little Discord little community or whatever they say. They may say they did, but they didn't fucking alert it. We alerted it. You can go look in the channel, February 18th. You go look at all the fucking puts that were alerted. I said all cash. Here's your a la carte of puts. June puts, March puts, you fucking name it. It's there. So the point is we have some newer traders in the room, right? They have some different styles. We're going to be offering some different classes. And so these classes are going to be to, open your mind up, give you an opportunity to learn something new if you want. You don't have to, like, and just something different to, if you want to learn a different strategy, if you want to learn how to do a fly, if you want to learn how to do a collar or iron condor or whatever it is, right? A straddle or whatever your flavor is. But I'm not going to really get into it. But I will say, the last thing I'll say is, if you guys have any questions and you're struggling, feel free to reach out. I'm happy to help you. This room has been open since August 30th. There's a good handful, like I think about 30 or 40 people in the room that have been here since day one or the first like 3 weeks. And so they're progressing fast because they've taken the tools, they've taken the psychology, they've taken it all in, and they're applying it every single day, and their portfolios are reflecting it. We have got a gentleman, and multiple gentlemen actually, but one in particular who I'm going to give a shout out and a props to, PB, not the fucking little Twitter troll guy who's, looks like he says he's fucking 12, but he's been 12 for like 10 years or something. But another guy, he's taken a $5,300 account in December and it's well over 60K. Okay. So applying this stuff, you guys, and it's not a joke. Like, I take this very seriously. The people that we have on staff for the admins, everybody puts their heart and soul into it. We've got some really great traders in here. Florida Hokie has been on fire lately. Hawk Holdings is in and out. He's running his own business too. He's building a trading platform for like a multimedia interjection. It's pretty neat. We'll be working with him, but it's not like it's not live. So, anyways, and then obviously Sir Wyckoff does he does Wyckoff. Obviously one thing I will caution is with Wyckoff, it is subjective, meaning it can get invalidated. Structure can. We had a bearish structure for Friday, obviously saw we went fucking great. So things get invalidated, that's okay. That's why we want to react on price. I will be trading my style. I'm going to keep my charts more clean because it's going to be easier for everybody to see my screen while I'm live streaming. So I'm going to trade. It's called trading naked, and I'll probably pop up my EMAs here and there to check over extensions and a couple things, and then and I'll have the charts. I'll have the lines drawn. Make sure you're drawing your pivots when I post the pivots. Okay, the pivots are key. And then, and another thing, you don't have to trade zeros to make a lot of money, you guys. You don't. I mean, you can just go look on my Twitter page. It's like a lot of just, lately, the last week, 2 weeks, I've focused strictly on SPX because I knew the vol was going to come and we were ready for it. We called this. We called this whole fucking downturn. But the point is, you can make a shitload of money, especially this week, like on Microsoft, on Coin, on Apple, on Tesla, on Meta, on these Meg 7s, okay? Last stock I'll bring up is Amazon, okay? I'm not a guy who's going to fuck around with low liquidity chains. I don't do that shit. That's how people get fucking bagged, and that's what we're not about in here. Okay, so this is Amazon. If Amazon pops up in gaps, I want to see it hold this one, call it 187 and change, and then it can have a really nice move up into the low 190s. Over low 190s, then it can really just magnet up. I don't think it's going to get there right away, but I do think there is a possibility if we get a move on ES, okay, where let's just say we get something like this. There is a, where's that here? Say we pop up, right? And then all of a sudden it drills, right? And it comes all the way down into this, lower zone, this low liquidity. Okay. If it starts to hold this zone, well, I'll be really, really watching closely for a bull move back up, right? Into big or through big tech earnings. All right. So these are things. Now, if it doesn't and it breaks and confirms short, then yeah, we're gonna go fucking take this son of a bitch down, right? So I just want to be open-minded to everything this week. Just this is a little bit of a different EDU than I normally do, and in every week we, I have a swing trade strategy that is pretty damn dirty. It is an EMA based swing trade strategy that's based on compression of price and targeting specific levels, liquidity levels, and how the EMAs push price up and through. So, anyways, does anybody have any questions?
Hey, Chad, it's RJ. I got a question.
Yeah.
What drives you to a particular option date? Is it just volume, or are you looking at other metrics as well?
Did you say option date?
Yeah, like what on the option chain? What's driving you to a particular date?
Good question. So when I'm looking for a strike, right? First of all, I'm looking for things to be mispriced. Excuse me. I want to see. It depends too. It depends on SPX, zero DTE, or SPX is a little different animal, but really what you want to be looking for is options that are mispriced. And what do I mean by that? Like let's say we got a $30 call on GME and for May, and the $30 call is pretty cheap. It's like $1.50, but then relative to the $32 call and the $28 call, it seems like it's mispriced, meaning the IV is a little different. Maybe the IV is a little higher on the other ones, right? So, but that happens. So there's mispriced option chains. So I look at that. I look at the IV on the option chains, but most importantly, I'm picking a strike where I know price can not only get to, but I want it to be able to have the opportunity to go through, because we want on ticker, we want to, for me, I personally like a sweet spot of 20 delta to 25 delta on options, right? Unless I'm really, really confident that this thing's going to get an outsized move, and then I'll go and look at maybe a 15 delta, right? So that's how I look at options. And then from a volume OI perspective, I want to see how the chain is structured up and down, like all the way from $20 calls all the way up to $50 calls on GME, right? I'm just using it as an example. And I want to see where that volume was bought. Where was it loaded? Are they selling them or are they buying them? How is the position? Oh, this is the positioning. And then I'm looking at the actual structure of the stock and trying to match it up to maximize that direction. And then I want to make sure there's enough liquidity on the chain, obviously, or on that option chain or strike I'm picking. Does that make sense?
Yeah, thanks. Appreciate it.
Yeah. And there is, if you're trying to play cheaper options, you have to realize, right? So You have to realize if you're going to play, let's just use fucking, let's use MSTR for example. Okay. If you're trying to play MSTR, right, and you're here at 298.58 and you're grabbing the 320 calls, right? Well, they're going to be pricey as fuck on Monday, right? But you better get a fucking move. If you get a $2 to $3 move, that's going to be like 20 to 30%. You really want to be, if you're the further, I guess I'm trying to say is the further out of the money, the more sensitive with your finger on the trigger to sell you need to be. Because, yeah, they could rip it 15 for sure. But, if you get that impulse move from, 290, 298, right, to 305, and then all of a sudden it fucking chops for the rest of the day, you're going to lose most of your gains. Even if it closes up, like it won't hold. It will maybe be up 5%, where on the boost right out of the gates, it will juice. And the reason why that is, does anybody know why that is? The reason why that is because
For this.
option. Do you want to? The reason why that is because, as the stock pushes in the direction of your naked call, let's say up, right? It's a call, you buy call for 320 and you're at 300 and it starts to push to 305. That depending on the speed of the move, right? If it's really, really fast, that option is going to move at such a pace that can't price it in as fast, right? Or sorry, it's not pricing it in as fast as it needs to. So it's overpricing it. So say for example, you got it's $500 for a $300 call, and it's all of a sudden boosting. Well, that thing could hit like $8 really fucking quick, and you only get a $5 move based on the speed, right? That's why like when you get an impulse move, let me pull up my EMAs for a second. When you get an impulse move on a stock, and what do I mean by an impulse move? An impulse move is this. And I'm just using EMA as an example. Okay. Friday, we took this short, right? It was right. Yeah, we took this. It was really nice short. It was like 135% or something like that. Okay. So we got short it was like kind of somewhere in here. And if you're not selling into, this is an impulse move. This is an impulse move. And on the upside, this is an impulse move. That push hard, because what's happening is those options, it's not pricing the actual option right, because the move is so fast it can't catch up. So it's overpricing the option, and you sell into that strength because the IV, implied volatility, is jacking up because of the speed of the move. Because the IV is not going to pop in this shit.
I ain't ready.
Sorry, I don't know if you were hot micing or if you had a question. Sorry. But in this shit right here, IV's not moving. In this move right there, IV's popping. So that's jumping the contracts on your calls. And if you're not selling into that, you're greedy as fuck. Okay? You're just too greedy. You can't do that. You sell into the strength, hold, wait, get ready to load, nibble, and then you sell into the strength of this move. That's just how you have to do it, especially with zero DTE. Have to. You can't hold for hope. It's not guaranteed that the stock's going to like this. It's just not. It does happen. Absolutely it does. But it's not guaranteed. Let's take a look at ES for a second. Look at this. I'll give you a perfect example. I took a 5200 put up here. Let's just use SPX because everybody uses it. Okay. All right, where is the open? Thursday, Friday. All right, Friday. Here we go. Okay, so here's the open right here. right there. Okay, so I took a 5,200 put off of my upper pivot, which was 292 or no 5292. So like right there, I had it laid out, and I took a 5,200 put. I actually took a bunch of them, and so I sold one on this push down. They jumped hard, and then they obviously went back to even. And on this move, I sold all of them but one, right? And then I held the one, right? And it just chopped, obviously. And by this time, even though it was lower than where I entered, it was down like 10%. And then by the time I got to here, which is the same price, it was down like 30%, right? Once it broke above my spot, I cut the runner. Like, you know what I mean? So like that's important to understand, you have to, because on this move right here, these things popped the most at all, like the most, like because that move was so aggressive and so fast, right? And so you can see on that type of move, you have to sell that push. Now, if you grab calls here, like I think I mentioned it on live, I said, hey, here's a spinning top candle. Every time they brought it into this zone, I think I did this. And every time they brought it in the zone, they keep bouncing it. Good place to get calls. And what they did was, what was the open on that? Open was 32, 33. Where's the close? Yeah, let me see here. Yeah, so what they did was they, whoops, hold on. Like, if you have calls here, this is a very relaxing trade because you don't need to leave here. You could trim here if you wanted. There's never any indication that you need to sell, right? The real target coming from calls down here is right here, right there, 5,300, rejection. So you trim into this push, and then you hold your runners. And where's your stop? You don't have to have a stop, but I would prefer to have a stop, because I don't want to just like let a fucking, trade go to zero because then it eats into my gains, right? My runners, so my stop is right here at this pivot. This is a clear as day pivot, 52.75. Your stop never gets hit. And then boom, pops up. And now your calls are up well over 250, 260%. And you can trim again. And then again, where's your stop? It's way the fuck down here. And then this move is really where you want to get the fuck out, because I had a pivot laid out on that day, or not a pivot, but a key level, 53.60. If we hold it, then great. It could go higher, but it never did. So it just oscillated. Impulse selling is the key, guys. Sell on the impulse. If you leave money on the table and you take your money, I tell you what, your P&L will still go up and to the right. It's when you're like holding for hope and you're wrong, and you see 80%, 90%. And there's traders that size for zero. That's just not my style. Like, I don't need to do that. Like, we hit plenty of trades in here that go, 50, 100, 300, 400%. Why do I need to hold for zero? My theory, or not theory, but my strategy is based on managing risk, and I'm okay with stopping out because I know that more times than not, more than 60% of the time, as long as I can manage my risk relatively tight, that I'm going to hit large fucking trades more times than I'd lose trades or stop out. And if that's the case, my wins, I know, offset that risk. So I know I'm always going to be fucking winning. Always. And some traders are different, and that's fine. Right? So everybody's got to find out what works for them. If you want to size shift for zero, then you got to know exactly what you're willing to lose. If that's $100, then that's fine. If that's $300, that's fine. So like the fly strategy that Ivan or IV trader gave, That's a great strategy to size for zero. Couple $100, let that shit rip. And if it goes to zero, you're not risking a whole lot. Yeah, look at that. It's not there yet though. Like I said, for me, I'll be looking to see once it tags and see where it rips to. If you can get to 58 or sorry 80, 86.7 or 86.7, see where it goes. God, it's kind of nice not to have EMAs up. Not gonna lie. Let's take a look at this though, structure wise. Inverse head and shoulders, it's beautiful. Everything's bullish. We actually have an evening star or a morning star reversal. You guys know what a morning star reversal is in a bull flag? Fucking crazy. Anybody know what a morning star reversal is?
No, inverse head and shoulders are the same thing, or no?
No, it's a so so there's two powerful patterns that you want to look at. Let's just pull it up here so you guys can see. There you guys. This is an evening star pattern. Come on, give me the actual there. Oh, what the fuck? Sorry. Nobody cares about that dude. All right, so this is it right here on the right, evening star. You have a bullish, this is a bearish setup. So you have a bullish candle, and then the second candle is indecisive, meaning a spinning top or a doji, and then the next candle goes bearish, right? Bearish confirmation. Now, the opposite would be this on the right. This is called a morning star reversal, where you have a bearish move down, an indecisive small candle, spinning top, whatever you want to call it, doji, and then followed by a bullish candle to close. And that suggests trend change. Does that make sense? So, yeah, perfect. All right. So what I'm saying is here is you have a bull flag here, right? And here, this candle right there is bearish, right? We can see that very clear. It's a down candle. And this candle right here in between is an indecisive candle, because you could say this move, this trend move right here, this is an uptrend, and then it reverses. And then as it reverses, it has indecision where buyers and sellers are fighting at a key level of 84,000. That is a massive fucking pivot that I have for BTC. 80K is a pivot, 84K is a pivot. Over 84K, we fucking long. It's that simple. Over 84K, we long BTC shit. Mara, Coin, MSTR, CLSK, all of it. Okay. Now, if they break it down, we want to be cautious with BTC under that pivot. Now, morning star reversal is bullish, for example. It moves down because this is now a downtrend, moves down, and then actually, you know what? Holy shit. This is actually crazy. Let me show you guys something. This is fucking wild. It actually has an evening and a morning star in the same fucking pattern. I haven't seen this out like in a long time. So this candle right here is bullish. This next candle is indecisive. That's a spinning top, followed by a bearish engulfer. That's a bearish engulfer. That's a reversal. That is suggesting in this moment that the trend is going to reverse and reject and go down, right? But it didn't. What happened is it tried to reverse And instead, the buyer stepped in on this candle and fought the sellers, creating the exact opposite, the other type of setup, which is called a morning star reversal. A morning star reversal is now bullish, which made this turn into a bull flag. And so this is a great example of why when you're looking at candle structure, you need to be not you don't want to be so biased, even though it is a bearish setup, because you need, after you see this, say you go short here, you see this candle, you start to go short, right? Then you go short right here, and you say your risk is, maybe this wick right there. Okay. And then it starts to go down. You're like, fuck yeah, I'm getting paid. Oh, now, nice. I'm under the pivot. Then you see this fucking candle form. You're like, shit. Doesn't mean we're going to go back up, because if this candle, if this next candle, opens below this previous candle and it starts to move down, this thing's going to drill right down to here and you win, right? You're going to have a winning trade. So even though you are green, but what happened was this candle opened above this closing candle, which is wild, which makes it a bullish move back up, and it actually turns it into a fucking bull flag, which is this is crazy. This is pretty cool. So it was like, okay, we're gonna rip. Oh, we're gonna dump. Oh, nope, fuck you, bears. We're going back up, right? It's pretty interesting. So that's a good example of both of those patterns. And I'll give you another example here of, on, I think it was Tuesday. Let me see here. I'll use this. This is a busy chart, but it's okay. I'm going to zoom in here. Yeah, it was Tuesday. We caught a 300, and it was one of my better trades I've taken in the last couple of months. Okay, so this is the move. So you guys did the fly right around, I don't know, right around in here, I think it was. I don't know. I think it actually was in this chop, in this shit. You guys were looking at doing the fly. And we were already in puts. So on this day, we grabbed like 430 puts, 417 puts, Friday puts, and zeros. Literally at the fucking tippy top right here. This is our entry. This is where, if you go look at the timestamp, this is where we entered. You can look at all the zeros and the swings. This is where we got in. And look at this. This is an evening star reversal. And this is a perfect example for you guys to see as the market pushes up, right? Where's the opening? All right, so yeah, so here's the open, it pushed down and then it ripped hard. And I was just waiting and waiting for it to float. And what I was looking for was this setup to happen. This is an evening star reversal setup where you have a bull move up and then you have indecisive where the sellers came in and then I was really waiting for this candle to close right here. And then I started to scale into shorts. First thing I did was I scaled into longer dated shorts because that's safer. The second thing I did was I was really watching to see if we got a close below this key level, or open, and then a push down below this 5250. Bags was already in puts on Qs, I believe. And what happened was, so we got the zeros, we got all those swings and just fucking stacked in them. And so when this next candle right here started to go down, and first of all, the first cue was the fact that it opened up underneath this candle. And then I'm like, oh, all right, this is going to fucking drill. It wicked up, it added more shorts, and then it started to push. And then it pushed below the pivot and closed, most importantly, below where? Right here. Where was the opening print? Right fucking here. Watch this. You guys see that? This, because I said it on live. I remember it. I said, I want to make sure I have confirmation because I think we got the at the money QQQ puts and as well on the zeros, the 440s. And I said, I want confirmation under this structure because it could do what? The same thing that I just showed you that BTC did. It could go up like this, indecisive, throw a fucking doji right above that structure, and then rip. That would be a bull flag right here, right? But it did not do that. It actually did exactly what I wanted it to do, which is confirm underneath the structure, open up under it, and fucking rinse. And that's when contracts went 1200% on zeros. And then our weeklies went 120, 130%. It was fucking insane. It was so fun. And those trades don't happen all the time, but they do definitely happen a lot, especially in this market. So that's a classic setup of the evening star reversal, right? And then if your stops are up here and you leave your runners go, you don't have to worry about it. You just fucking ride that shit. And then you wait until time in the day, or what? What are you looking for? Overextension, right? Look at this. Boom, pops up, and then boom, you get the big move. Look at how far away you are from here. And it's in a key pivot. And here's the kicker. It's right at a key time, 1 to 130, right? So you're going to be looking for reversal setups on there, right? So, anyways, anybody have any questions? Okay, awesome. I'm going to go over to ES quick and take a peek, see what futures look like. This looks good. What was it? Oh, let me just see here something. Open. Yeah, this looks good. Looks like it wants to break. So personally, there's a good chance if we break this open, it's going to go grab liquidity up here. That's where I would look to be going short. That'd be fun. That'd be fucking awesome, actually. But anyways, welcome to the green room. We got some fun stuff. We're gonna be watching ASML, TSM, Goldman Sachs in the morning. We got a little bit of data, nothing crazy. I'm gonna update the economic data and events channel with all the economic data this week. There's really not a whole lot other than retail sales. If Amazon does pull back into the retail sales data, I actually would like to add to that long position for Amazon. Start to build into a long. So, anyways, guys, have a good night and rest up. Well, it's gonna be a low, like a very smooth week. We're gonna look to get off to a good start. Be very patient with zeros. Unless something gets so juicy, then we'll jump on it. But I just really want to let everything set up for us, and then react accordingly. So, anyways, I'll see you guys in the morning. And last thing I'll say is this. So for those that are new, so I have my son this week. Okay, and I am divorced, so I don't have somebody to help me out And I don't want to have a babysitter right now because I haven't even found one that I actually trust. So he's fine. He's really well behaved, like really well behaved. And you'll hear him here and there on voice, but sometimes I'll have to pop off in the morning because he wakes up, depends on how well he sleeps in. But he'll wake up and I have to, change the diaper and, get him fed and stuff. But I'm going to be watching the market always, but keep an eye on, Florida Hokie and, and Razzie and some of the guys. And we'll have your pivots, laid out. So, but it's not like I'm going to leave you guys fucking hanging. So I just want to give you guys a heads up. I'll definitely be on. I'll definitely be trading, but I might not be like or I'll be live streaming, but I won't be like clicking screen to screen to screen. But if he does sleep in, we'll probably we'll see if something sets up right at the gates and slam it and rock and roll. So, anyways, have a good night and peace.